Today is Thursday, the 11th of June, and my market observations for today are definitely cautious and potentially cautiously bearish after yesterday's close. Is another clear sign that the market is de-risking and that price is favouring the downside for the most part. This is the first real structural change where these lows were actually closed below yesterday. There was a brief moment on the Tuesday where there was some relief, but the fact that all of that relief is already retraced is just a clear sign that the market's still looking to de-risk and that price action favours the downside. Also, notably, the 10 days and the 20 day are starting to slow down, and it looks like actually in the next few days, the 10 day will probably fall below the 20 day. So clear change in trend direction and overall market structure, and that obviously coincides with the Nasdaq and the Dow Jones as well. The Dow Jones is probably one of the clearer signals in terms of yesterday's daily close, making new lows overall, and I guess is the broader market. It's a proxy for the broader market. So the fact that the Dow's slowing down and retracing as well, just confirmation that the market environment is really changing. The one thing that feels a little bit, I guess, confusing is the fact that the Russell, the IWM, is holding up fairly well for the most part. Yesterday's daily close wasn't as severe as the other indexes. But I guess this kind of plays into what I was speaking about yesterday in terms of all of the market breadth indicators are still holding up relatively well. The number of stocks above the 20-day moving average still holding the 50 midpoint. The number of stocks making new monthly highs did retrace a little bit yesterday, but it's still holding relatively well. And similarly for 52-week highs as well. So what that says to me, reiterating what I said yesterday, is that the market is still a little bit complacent, or there's just some rotation happening just into the laggards, just to squeeze out the last little bit of this, I guess, mini bull run or lockout rally that we've had. So coming into commodities, Bitcoin, the lows are still holding for now, but the fact that this relief kind of moment on Sunday is already retraced fully isn't the best sign. These lows are holding for now, but I can't say that this is screaming strength to me, and I feel like it's just a matter of time before price breaks down and at least tests these lows and potentially further. Gold had a pretty significant sell-off day yesterday and actually taken out these lows, so it's new lows overall from this downtrend that started, and things just look really weak. It's super extended below its 200-day moving average now, and it looks like it is finding support around the 4,000 mark, but the fact that there's no real strength or relief coming into this, despite it's supposed to act as a safe haven, is just a real sign of another sign of confluence that the market is just looking to go complete risk off and is confused and just wants to sit in cash. And actually that supports the idea and price action in terms of what the dollar index is showing in a clear uptrend. The 10-day and 20-day are moving higher, and these wicks on over these past three and even today now are showing that there's a lot of upwards pressure, and it makes sense for these swing highs to be taken. And then if they do get taken, then it's, I mean, that's a breakout, right? That's a classic breakout. It's had time. It's above the higher time frame moving averages now, and yeah, things have a little bit of a shakeout here to mark the bottom, and it would all line up that the dollar's gonna start to move back higher again, and that isn't good for risk. The one thing that does kind of counter this view is the fact that bond yields aren't as strong as what I thought they potentially would have been. I thought they would be a little bit stronger than this, And I guess it is too early to say. We've got FOMC next week, so that's probably going to be the real tell in terms of what the bond market's going to do. But for the most part, it's looking quite undecided in terms of where it's going to go. Undeniable that it's in a clear uptrend, but at the same time, this recent price action, it could be stalling out a little bit here. So that's one thing that makes me, or I guess supports the confusion with, especially in regards to the breadth indicators. But at the same time, the price action's king, and the S&P and the major indices are really telling the story, in my opinion. The fear and greed index as well, that did come down again, and it's nearly an extreme fear rating. So that is another clear sign that the market's not in a good space right now. But again, the real story will be the FM, or the real I guess turning point or decision point, I feel like, would be next week when FOMC comes and the Fed decides on forward policy.